Okay, everyone, how are you? Let me just get my screen up here. Everyone see the crude oil? Good morning, Scott. How's everyone doing? Also, welcome viewers from investing.com. So let's have a great day. I want to start off with crude. You know, everyone knows I was calling this a megaphone top, which is a pretty wild formation. A lot of people are having issues with this formation that I'm calling here that could eventually take us back under 50. I can tell you this, that I was very surprised after this breakdown to see crude recover this much. I guess there was a lot of bullish news, but it's interesting that at least so far it stopped at the 88.6. So back down here, I thought I'd be lucky to be able to sell it at 61.8 back, okay? Then it ate through 78.6 and was finally rejected from this 88.6, which, you know, the bigger the retracement at times, the stronger the market is. So we'll see what kind of finish we get here. Still my contention that there's potentially $4 from here. This was 270, so 1.618 would be $4. Take it down to 53. Even if there's another stop hunt up here, I'm not sure if it will confirm, but thinking that we might get some type of failing rally here off this initial decline and maybe we stall in here. Really, the key is going to be back here under 56, 56.20 for a continuation to a downside, and taking out this high most likely is going to lead to a new high. The S&Ps and stock indexes keep coming in lower overnight and then fighting their way back during the session to close okay. But it's a little different this time. You know, we've had two lower highs. And if we start taking out this low from yesterday, I think there's problems. The reason for that is that's where the 200-day comes in. As you can see, the blue line is your 200-day, which it held right here. On the week, we're a little lower. I know we're lower in the S&Ps. Not sure if we're lower on, no, still a little bit higher. Last week we closed at 70.82, so 14 higher on the week, and NASDAQ's been stronger this week than S&Ps. S&Ps closed last week at 79.10, so we're actually one handle lower on the week. I know there's only 2 days left, but if we could get some acceleration to the downside, there is a chance for an outside week here to the downside. The other feature that is pretty interesting is crude making a new high for the week. It got rejected a couple times at 114, and now we're back above it. So the case is building for a deeper dollar correction. Maybe 95.50 is the most you can give it here. And there is a little three drive formation. So I think it's do or die for the dollar in here. Can you see this? It's pretty textbook, three drive in the dollar. I have my hands full. I'm not doing anything with it. But you could see, and it's not ideal here because the RSI was 21. So it's not my preferred setup, but there is some divergence because, you know, here we were 21, 26, 23. So actually, we're still diverging from this RSI reading, but even lower from here. So I'm going to just give it another couple days to see whether or not we're beginning to break down. I have this line here, and I thought we were going to close above it. So I would say, you know, for confirmation, if you're a dollar bull, you may want to wait until it does something right again. And my number for that's about 96.15. And if you want the best research on the net for FX and other instruments that you could trade CFDs for, I recommend you take our trial. It's $1 to navigate our site, including the chat room, for 10 days. It'll give you an understanding that you found a home after 10 days. You won't want to go. Also, a big weekend in New York for our team. They're going to be at the Traders Expo in New York. The Big Apple is buzzing about Steve and Joe and Grega and perhaps Blake being there. It's a great time to meet the team in person. I don't know about how you guys feel, but there's nothing like shaking someone's hand to cement a relationship, because relationships that are virtual on the internet at times don't have the same type of staying power. Easier for people to just let go. Hi, Scott. Then after you've met them in person. So don't navigate the FX markets without a dashboard. Okay, and this is our dashboard right here. Yeah. And as you can see, you know, it's like a traffic light, because you have, you know, green is go, yellow is caution, red is stop. Don't run red lights when you have more than a couple on any pair, and you have all the different disciplines: Elliott wave, harmonics, basic technical, candle, and macro. So give us a try if you've been listening to us on investing.com. FACE is only the tip of the iceberg. The real good stuff also happens after the interviews that we do every day. And speaking of interviews, I wasn't able to reach Crypto Don Alt, so I'm going to reschedule him. But one of my favorite guests is going to be with us today. Saeed is going to be with us at Trader One SZ. So stick around for Saeed. He has a very unique way of looking at markets. He uses a lot of quarterly stuff, which is, you know, I've seen almost everything. And he's introduced me to consider what markets do on a quarterly basis. So stick around for Saeed. Let's see what else we have to talk about. Gold getting a little lift on the dollar coming off. You know, I thought the lift in gold would happen sooner before we went down all the way down to this 1318 level. So maybe this is A, B, C, and we're going to have a failing rally here. Do your fibs from here to here, 18 to 46, 28. So say 14 from here is 1330. So 28 would be 12, 16. Around 1334, I'd be interested in one more decline in gold, maybe something from 334, similar, 26 from there, take it back down to the low 13s, high 1280, something like that. So to me, it's in no man's land. Miss this sale from here to here. I didn't buy it yesterday. So, I'm waiting for strength to try and sell one more decline in the gold. If the dollar is breaking down, that could seal the deal for a rally in the precious metal complex. One other thing I want to talk about, you know, we had a nice run in Bitcoin and until Sunday night when we have this, but I'm starting to see the development. Maybe it shows up cleaner. Yeah. So this looks like drive one, and then we had a spike for two. So maybe we have one more spike down towards 3,600 for a 1, 2, 3. Looks better on a 1 hour because you know, it's not the bottom, but you know, we did take out 30 on this spike. I'm thinking there's one more low, and it could be a good probe based upon believing that Bitcoin bottomed all the way back here, put in a higher low here, and we should not take out these lows either. So to me, I think there's a good shot that this is the pullback to buy for higher levels in crypto. Everyone with me?
Oh God, it's so gross.
What is?
Crypto.
Oh, yeah.
No, you know, it does look like it's trying to create some sort of basing pattern in cryptos. I'm not.
Yeah.
I'm not a huge fan, but that's not to say that I'd be right or wrong. Trying to get long down here. I mean, technically, it looks like we are trying to base in whether it's ETH or Bitcoin, Litecoin, any of the bigger crypto spaces. The problem is there's a big problem with cryptocurrencies. First of all, the euphoria is gone. So you could argue, well, now that all the all the players are out there. It's a time to be buying. But then again, I can't really justify at this point, you know, is there any reason to be buying cryptocurrencies down here, or is there more weakness to come? I think, you know, we talked about this like maybe over a year ago. I said, you know, at some point, you know, once cryptos come down enough, this might be a time that you start putting some away. And I've actually considered doing a little bit for my kids, you know, just putting some away. And it's one of those things that if it is the next best thing to sliced bread in 20 years, then, you know, maybe it'll be great. And if I piss it away, then it's, you know, it's just that. It's just you piss it away, and it's money.
Well, you know,
to
Bitcoin
lose.
has been the weakest on the advance. The strength has been Litecoin, and it's pretty affordable. And you know, if you look at the depreciation of Litecoin, it's been almost 90%. Okay, and Ethereum 90%. So, you know, after bubbles, 80-90% is usually it. I don't know if you're going to get 100% retrace, but
well,
you know,
if it becomes like an obsolete a vehicle, then you won't get 100%. Other than that, yeah, if you're talking, you know, if you're talking, you know, for a viable store of wealth, I guess, if that's what you want to call it. Then yeah, I mean, we're probably near the bottom. I'm not here to argue the viability of a cryptocurrency.
It's just a trade to me, Blake. A chart and a trade.
Yeah, I don't, you know, for me,
I don't understand it, really. I really don't.
I don't think anybody does still, but to a certain extent, for the most part. But you know, you even have people like JP Morgan's turned the corner on, Jamie Dimon, excuse me, has turned the corner on cryptocurrencies, and which I think was rather interesting. That news came out a couple of weeks ago. So, like I said, is this a place where you actually start considering buying some cryptocurrencies and putting it away? You know, maybe. For me, I'm not looking to trade it, at least not at this point. But it is very technical. I mean, you know, like if you look at Ethereum, I mean, the reversal at 165 was pretty clean, pretty much there, exactly where it should have failed. Bitcoin's still, you know, struggling below 4,500. Litecoin, as you said, is actually acting a little bit better here, but you can also, you know, look at it and say, well, you know, are we you know, just really looking for another leg lower too? You know, it's
another reason, you know, I cover it, Blake, is that there are just so many people interested in it that if I can give them and we can give them some decent technical guidance, that you know, since they're, you know, married to this asset class, at least they can get some decent technical points to make some decisions with.
Well, that's, you know, that's the whole basis of why we offer it on ForexAnalytix, is we offer, you know, Ethereum and Bitcoin, not so much because we're super interested in it, but because a vast amount of our traders are involved in some way, shape, or form. So, and like I said, for me, it's not for me, but you know, crude oil is not for me either. And you were just talking about crude. I'm probably the single most worst crude oil trader on the face of the planet. So, you know, it's like, okay, well, we have crude oil on ForexAnalytix, and a lot of people like to trade it. And, you know, and I can't say that I don't trade it and haven't traded it, but it's one of those things that I try to stay away from as much as possible. Now, speaking of crude, I did myself, Stelios, Andre, and Greg, we put together a blog yesterday regarding crude, and I think crude's at a very, you were talking about the megaphone formation. You know, personally, I think that we're looking at a potential failure of an inverted head and shoulder pattern, and I'm looking more at the repercussions of what will happen with currencies if crude fails, because if crude fails, then I think, and then the same thing is if crude rallies, what will happen there. So if you guys want further information on what I'm talking about, there is a blog that we do. You don't have to be part of the ForexAnalytix community to read our blog. It is free. So there's a big crude post that we did yesterday. You can see it here. My charts, my thoughts, currencies, harmonic Elliott wave ideas. So make sure you check it out. Now, we got U.S. GDP coming up, and I want to talk a little bit about what's happening in the dollar. So as you guys maybe have seen, the dollar is taking it on the chin today. We are actually below the 618. We're approaching this trend line support. We're near trend line support. We could actually dip a little bit further, I think, in the dollar. And the reason why is if you look at the euro is coming up to the downtrend line, and the 618 retracement comes in at 114.40. A couple of my guys in the office were looking at a little bit higher, maybe even a 114.60. But I think up here at 114.50 is going to offer us some pretty good resistance for the euro. Now, it was widely known, and if you are not in the ForexAnalytix chat room, then you may not have known it, but it's been pretty widely known that there was going to be dollar selling today for end of month. A lot of banks have been reporting end of month dollar selling coming in. I think a lot of those flows are going through the market as we speak. So if you're wondering why the euro is so strong, well, and there's a few reasons. Obviously, we have end of month selling, ahead of the fix here in the next couple hours, and then probably throughout the course of the day. But it's already taking place. So if you're going, oh shoot, I need to start selling dollars then, well, you might be getting maybe towards the tail end of it. I don't know if I would try to chase the euro much higher. I think 114.40 is going to be a pretty key resistance when we hit the 618 retracement. Does that mean you should short it there? I mean, you have a good risk reward, I think, from a counter trend point of view, if you want to try to take a counter trend trade there, because above like 114.60 and you're going to get stopped out. So when you're talking about risk reward, I think there is the potential of shorting the euro up there. But keep in mind a couple of things happened. First of all, we had this bullish wedge, broke out of the bullish wedge, hit the 50% retracement, came back, retested the breakout point, also the uptrend line here. Retest the uptrend line, and if you use ForexAnalytix, you're well aware of all this yesterday. You can go back and look at all yesterday's analysis is challenging the uptrend line and possibly going to set up a failed breakout. The euro dollar is holding on to the uptrend line, and now we've rallied to the above resistance into the 618. So you can get a feeling of what's happening just reading through the ForexAnalytix analysis over the last couple of days. Now, once again, it's going to be a decision point when you get up here. Now, I'm going to point out why we can get up there in the euro. So if you did not know, we have US GDP coming out today. Now, U.S. GDP quarter over quarter for the fourth quarter expected to come out at, now investing.com has 2.6%. Trading Economics right here has 2.4%. 2.4%. Bloomberg has 2.2%. Forex Factory has, because they queue off Bloomberg, I think for the most part, they have 2.2%. I think 2.6% is absolutely, crazy and far-fetched. A lot of people are looking that that we might have a little bit weaker U.S. GDP. So the thing is if we come in sub 2%, we're going to see this 114.50 really fast. Remember, it is backward looking, but I think the gist of all this is, you have to take into account that the U.S. Economy is slowing down, and quite possibly the global economy as well. So just keep in mind that that there is a possibility that we're going to get up to 114.50 today, especially if the GDP print comes in, let's say definitely sub 2%, but let's just say sub 2.2%, and we are below consensus estimates on Bloomberg. So, that information is coming out in 10 minutes. The pound struggling a little bit as we completed the bull flag pattern. Let's talk about the cable for a second. First of all, you guys know we're in a big neckline of a big inverted head and shoulder pattern. We're probing the neckline, we're probing the breakout. A lot of people trying to fade the cable up here. I get it. I understand why. I see the overbought intraday overbought indicators, anything from if you're using a MACD to an RSI. I get it. The fact of the matter is that the cable pullback has been very, very nominal, and this consolidation at higher levels has to make you nervous if you're short the cable. I know I'm just like you guys and gals. I am. I like to see if something's overbought or oversold. I start getting very tempted to fade those moves and try to go the other direction. But the fact of the matter is the pound is holding up really well. So you have to take that into account if you're trying to fade this move. If we have a weak US GDP number and it's too weak, the cable can trade up to 134 and the euro up to 114.50. So I don't think that's going to anybody that's been trying to short the cable the last 24 hours is just going to get stopped out because all their stops are residing above the high. So just keep that in mind if you're trading the pound. Aussie, it is a little bit weaker. We had weaker Chinese inflation data overnight. If you look at Chinese PMIs that came in overnight, probably some of the most important numbers of the week that came out last night, and they came in weaker than expected. That is weighing a little bit on the Aussie or prohibiting the Aussie from going higher. And then also, you have to also note that the North Korean and U.S. talks have fallen apart. Trump abruptly left Vietnam, and that's putting a bid in the Swiss franc, and that's why the dollar Swiss has strengthened pretty aggressively. We did hit 161% extension. If you were just in the chat room just a little while ago, I was noting that we're probably going to get a bounce here. You can see here's our chat room. It does that every once in a while when I bring it over. Let me just go to the file list, and Swissy 161% extension. I was just saying that we might get a bounce here. Very oversold on the hourlies. We're getting a little bit of a bounce off of that. Now, it's not that I want to be bullish the dollar Swiss, it's just if you were short, you had to keep that in mind. And then the dollar yen still range bound, 111.20, 110.20. Let's get us out of this range here. Let's get us out of this range here before we get directional in the dollar yen. We've had some false how should I say, false excitement on the downside, false excitement on the upside, I guess I could say it like that. But 110.20, 111.20, obviously we're mid-range right now, so there's in my opinion, very little chance that we're breaking above resistance or below support following the GDP numbers. They put us in the middle of this range for a reason. So, we are in the middle of this range, and we're probably just going to probe the upper or lower end of this range following the GDP. You might actually look to take the opposite side of that if you hit the lower end or upper end of that range. Might be a potential idea. And one other thing that I wanted to mention is because Coach mentioned it, and I'll turn it over to Steve. Steve is back, by the way. He is back from his trek across Europe which we'll
I
talk
heard
to
he
him.
broke a record.
Yeah, I mean, he
His
was
speed record. Greg had told me he was driving 150 miles an hour down.
Yeah, he redid the Cannonball Run, I think is what it was.
Wow.
Yeah, but watch gold here. You know, we had an upside probe of this this trend line. False breakout on the upside should lead to a breakdown. We probed the support, so not really a breakdown yet, but you can't rule anything out right now. I think if the if gold makes it below 113.70, we're going to come down and test 113 and probably lower after that. So just some food for thought as far as gold goes. I'm not trading gold, but obviously I use it to help guide my decision making in what I want to do with the dollar. All right, and with that being said, I heard Stelios.
I am here. Yeah, I was about to say that Steve broke another record. He drove at 150 miles per hour and he was talking the whole time.
What a surprise!
That is no. There's the funny thing is he breaks his own record. That's it. It's just his own record. So Steve, how you doing?
Yeah.
He freaked Greg out, and you know Greg does extreme sports and stuff. So anyway, that should tell you something.
Well, so Steve, nice to have you back. What's going on, guys?
Good.
Okay.
Everything is good.
Good deal.
Back in time to pack to go to New York.
Yeah, more or less. Yes, a few more days left, and then New York.
All right. Well, I know everybody's excited to have you back, so I'm going to pass it over to you as we get ready for U.S. GDP, and I know you and Stelios will be covering that. Just remember, guys, you know, the euro, I think the upside is fairly limited. I don't know if I'd stand in the way just yet, but I think if you get a strong GDP number, like let's say we get something in the range of 2.4 to 2.6%, you're going to get a failed breakout here, and then you could probably look for a reversal in the euro. That's just some. I mean, I'm anticipating a weak GDP number, but you know, I don't know if I believe U.S. numbers about as much as I believe Chinese numbers at this point. So we'll see what we get here. And I'm going to pass it over to you all. And thanks for those of you that are new to our community or just tuned in. Just remember, we do. You may be logged in whatever way, but however you got here. But we do broadcast every single morning at the same time. So and Dale has such great interviews with so many professionals in the community, people you see on CNBC and Bloomberg, and he has in-depth interviews with them. You should listen here every day just to hear some of his interviews. He's got a good trader that's coming on this morning. So it'll be great. So make sure you guys stick around, and don't forget to visit our sponsor, Forest Park FX. They help make this webinar possible. Let's make it free for you guys. All right, thanks.
Good hunting, Blake.
Thank you, Blake.
Guys. Have a great one.
Okay, we have 1 minute. Sorry,
go ahead. I could finally say Steve's plural, and now I'll quiet and wait for the news. Okay. Glad to have you back, Steve.
Yes, indeed. Actually, yes.
Glad to be back.
So we have USD GDP in 1 minute. I can take that minute just to briefly mention yesterday we had that vote in the UK Parliament, which was the Cooper Amendment, which basically allowed a further vote to extend Article 50, which was kind of expected, but it passed with a huge margin. I think only 20 MPs voted against it. So basically, we're back to now the situation where 12th of March, we have the big vote on Theresa May's New Deal, and then we have, if that fails, we have a vote in the Parliament to agree on leaving without a deal, and then if that fails, the next day we have another vote to extend Article 50. So we have 3 votes coming up.
The first 2 votes are going to fail. The third one is going to go through, and then we're going to get to the next deadline. We're going to get boring news all the way to that, and at some point they want people to get sick enough to everybody feel more or less relieved, to have another referendum or whatever. So
Okay, here comes the number. But still, was that
2.6? 0.6. So that's
pretty good.
That's good. Yeah,
that is decent. Yes, that is decent.
Canadian numbers slightly worse, but really the US numbers
initial jobless claims as expected. So yeah, GDP better than expected.
Dollars rallying a little bit.
The rest more or less a non-event. Okay, so just to say in advance, I think that the year-on-year GDP for the year that passed is going to be the high watermark for this administration, in my opinion. I expect much lower print for 2019. And I expect quite a weak first quarter GDP, so let's see what comes from that. Anyhow, 2.6, so far so good for the dollar. We're not seeing any really big reaction. Let's go down to the 4-hour charts. I mean, yes, obviously the dollar is gaining some strength here, but so far nothing to really write home about. USD yen is rebounding from the lows. The euro is now approaching now actually the market is still reacting. Let's wait a little bit more to see what we're going to get.
Steve, while we're waiting, I wanted to ask Dell. I tried to ask yesterday. Was the Cooper amendment, Bradley Cooper, making a push for his movie not winning the Academy Award?
It's a good movie, though. I liked it.
Yeah, it was a good movie. Anyway, that annoyed Blake yesterday. So anyway, no jokes. And Steve, I'm wondering what you think here of euro. Are we turning the corner? What would be your line in the sand in the dollar and euro here, Steve, that we're shifting to? Because I know long term is more negative, the dollar.
As I've said many times, the euro is an abomination at the moment, right? I mean, why would you want to even trade it? Let's just look at this chart.
Yeah.
Right.
Yeah.
I mean, why do something with it? So, in all honesty, I have no clue. As a short-term trade, I was looking at that wedge here, and that was a very good opportunity, for a rebound from there. But if you're asking me what I think it's going to do now, I mean, it should be facing rather soon at, a descending trend line somewhere there. So let's see what happens from there. Other than that, just look at this. I mean, we've been chopping around for, already very decent amount of time. So I wouldn't be doing absolutely anything with it. I think there are better opportunities out there. Now, having to do with the DXY, first of all, DXY completed finally the head and shoulders formation. We had seen it.
Yeah.
I had shown it, actually. I had spoken about it, before I left. We came up, we retested it several times, as you see, and, we resumed lower, and now we've completed this head and shoulders formation target. So the question is, what happens from here? Potentially that can prove to be like a corrective formation. As you said, and I totally agree with that, 96 and change, 96.15 is probably a good level to watch because, as long as we stay below it, DXY can still remain under pressure. But on the other hand, I would be quite careful here because even if we extend this trend line, you see that, we can't turn bearish yet, right? I mean, I'm watching this as a megaphone formation that we had. We are almost retesting. We almost retested actually, several minutes ago, this trend line. So let's see what happens from here. I think it's quite an important level to watch. Now, if we do pass above 96.20 once again, I think that's going to be quite a bullish sign. I'm going to be looking for higher levels from there. Now, if we slip below it, then the situation is going to become more complex. I think that we're going to open the door for another retest of the 95 area, and then a breakdown from 95 is going to be quite a bearish development. And I think then we can be, really talking about, more upcoming weakness for the dollar. Now, until all that happens, I'm just, monitoring this formation. Now, having to do with dollar pairs, and especially the popular ones, I have to say that the one that looks best at the moment is the cable, right? I mean, cable had a nice rebound higher. It had a move lower that, as you see, is textbook corrective. I mean, it was like, clearly an ABC here. And then we started moving higher, a corrective move, then higher again, a little bull flag, higher again, perhaps a triangle or a bull flag. So, the cable looks good for more upside from either here or a little bit lower. I think that, sorry, this is the pound kiwi. I was looking at the other side. So here it is. The pound, here it is, same situation anyhow, channel lower, move higher, little flag, move higher, another flag here. So it looks quite decent. I think as long as we stay above 132, it looks very, very decent for a continuation higher. We've already broken above this trend line as well. So I think the cable looks quite nice, and so do the rest of the pound pairs. By the way, the Euro USD is actually giving back completely the gains that we had after the GDP. Still remains in a little channel here. So, I'm going to be monitoring. If you want a short-term trade here, I think monitoring this ascending channel is the way to go. I think if we do break below this area here at 133.60, we might have more weakness, and Blake will get his actually, look at this. Now, this is quite a pullback. I mean, we've already given back all that. So let's give the market a little bit more time to settle. But I do think that if we actually fail from here, and given the fact that we had a better GDP than the market expected, we might see a dollar rebounding, as you see in the DXY that we were talking about before. There is this little wedge. So, a break up from this wedge should happen at the same time that the Euro USD channel will be failing. So those two should happen at the same time, and I do think that both of them will be pointing to the same direction. Now, if we want to, I'm going to go to the metals because I think the metals are quite interesting. But before we do that, let me say that nothing has really changed since I left, having to do with the Aussie and the QE, because both of them remain in triangles. I'm watching this as a symmetrical triangle, so we're still consolidating, we're coiling within this formation. So, there's nothing really to do with Aussie as long as that's the case. More or less the same situation here with Kiwi. So, I think more patience is needed here. But the metals actually, for different reasons and various reasons, are quite interesting. If we take silver, for example, silver had a key reversal on the daily yesterday. I mean, we had this spike higher, and we had temporarily, what was it? From June, it was like, what, a 7-8 month high? And then we reversed to close lower than yesterday and the day before yesterday, and lower than several days ago. So, we left behind like an outside black candle, a shooting star in this case, in the key reversal. So I think that this is quite a bearish candlestick, especially if we confirm a breakdown. I think a daily close below $15.5 for silver is going to be quite a significant development from a technical standpoint, because that's going to mean that we're breaking below this channel, and given this key reversal that we also had, I think that's going to be a nice sign that something is changing in this market. Now, gold, on the other hand, has not been giving us such signals. I mean, the move lower started quite nicely with this evening star formation, but I have to say that so far the continuation does not really point to an impulsive move. Of course, that might change regardless. I think that 1300 is a key level to watch, psychological but technical as well. So I think as long as we remain above 1300, you need to be careful being short gold. Because there is still no strong indication that gold has stopped. Obviously, we can't have like a big reversal and continuation in silver and gold completely diverging. So something has to give. So far, conflicting signals between the two of them, and I think a few more days should shape the situation a little bit more and give us a better indication. Now, one of the most interesting metals has been actually platinum. Platinum has been for a huge period of time one of the weakest metals, but after a false breakdown here, we've gotten some, V-shaped recovery here. I mean, we went from 780 to 870. We're talking about like a huge move here. It's like, let's see, it's more than 12% of a rebound within 10 trading days. So, that's something to actually mention, and that's something to to watch closely, because this kind of behavior is behavior we haven't seen for some time in platinum. Platinum is currently testing, as you see here, a horizontal support resistance area. So I would be, especially given the recent strength, I would be a little bit careful here, because even if there is more upside, we can easily see some type of a pullback. But then if we actually do continue higher, I would be watching this trend line resistance at the same time. And we had a friend here asking if I've seen the monthly candle in Palladium. Yeah, I don't really need to see it. I mean, I see what Palladium has done during the month. It must be like a huge candle. So, there it is. It is actually a huge candle, higher, as you see. I mean, monthly RSI is currently almost at 83. That tells you all you need to know. Weekly RSI is currently almost at 85. Daily RSI, if it wasn't for yesterday's candle, it would have kept climbing, obviously. I'm also watching this ascending channel here in the platinum, because this might be a little overthrow. I mean, platinum is due for at least a pullback, to mean revert a little bit even within this channel. But yes, it remains extremely well bid. It has only been producing periods of consolidation and no real pullbacks since we had this corrective move lower. I made the mistake of not buying the breakout, although I was monitoring it, hoping for a retest. But such a strong, as it proved to be, such a strong uptrend has offered literally no pullbacks, so no opportunity to enter long with a risk reward that would make sense, right? Because it's not only about entering long, but it is doing so, with a risk reward that would make sense. Otherwise, it's jumping the gun, and sometimes, of course, you might profit from doing that, but other times you'll find yourself in a very tough situation. And the first thing, in my opinion, a trader should learn to do is avoid quite tough situations when and if possible. Now, copper also remains very well bid. We had indicated several times that this 286, 287 area was the resistance of a rectangle, and if we did break above it, we should expect an extension equal to the height of this rectangle. So I think that this is still the case. I don't know if we're going to see some type of a pullback, but as long as we remain above this blue broken trend line, I think that more upside to fulfill that target, which is going to be a little bit above 315, is the path of least resistance. Obviously, as you see here in the daily chart, we are decently overbought. So as I said, a pullback is not out of the question. But I think that higher prices are quite likely to follow any type of a pullback. Now, having to do with stock indices, not much has changed since I left. We have two things that are more than apparent. One is that we have a loss of upside momentum, but the second one is that we have an absence of an actual, real breakdown. So something has to give at some point. I mean, we either accelerate higher once again, or we actually fail from here. 28, 12, if we're talking about the S&P, about the SPX, remains a very key area. We've found a high 3 times here in the recent past. It's also, an Elliott wave target. Wave 1 equals wave 5. Wave 5 looks to me like an ending diagonal here. I haven't seen, Gregor's latest count. We discussed other things when we met in Slovenia, actually, as you understand. But other than that, I have to say that buying up here still makes no sense. But if you actually want to be a seller, I would be likely advising people to wait more for a breakdown of this ascending trend line to at least confirm that this is some kind of a wedge. And if that's the case, you would want to see a breakdown come through with, a decent volume and, some acceleration to the downside, right? Because, breaking below it and, more or less doing nothing or just slowly bleeding lower is not the kind of behavior you would expect if you're actually looking, for at least a decent correction from here. I do think,
Steve, Greg had told us on Skype that while you were driving about 150 miles an hour, you were pulling up charts on your phone to ask him about wave counts while you're making sharp turns. Is that true? Huh?
No,
come on, man. All right, I'm exaggerating. Because I know when you're around Grega, you can't help but ask about a wave count. Okay.
Actually, believe it or not, with Grega, we had both dinner and breakfast in next morning, and we actually went to his new house. He has built a very beautiful house at a very nice area just outside the center of Maribor, and we had absolutely no discussions about the markets. Zero. I mean, 0 minutes.
That's refreshing.
Yeah, actually it was.
Yeah.
Yes.
All right. Okay, you have some questions here.
Absolutely. Let's have a look at them. So let me see.
People in face want to know, man. They want to know what's going on.
Well, Dale held on that for a whole day. Many people doesn't have this spike in silver. That's true, Robert. I know I already checked it. Is gold forming a wedge on a 4-hour time frame? If you're talking, if you mean a pennant, like a bullish pennant, yeah, it looks like it. Is that a flag pattern on USD ZAR? Yeah, we can have a look at the USD ZAR. Let's go ahead. I've already done my due diligence, so I even had a look of all the exotics and see what they're doing. So I have to tell you that USD ZAR has still not made the big move. It was looking like it would, but it actually didn't. But this formation still looks to me like it's corrective. So I have to say that having to do with USD ZAR, I expect that the chances of a break higher from this formation remain, very, very decent. Do you think the NZCH, I'm guessing you mean the New Zealand Swiss franc has completed the down move? If you mean the New Zealand Swiss franc, yeah, I have no problem having a look at it. I'm assuming that's what you mean. Let's see. Okay, quite a nice trend line here. And if you don't mean that, actually let me know, right? So I can have a look at the proper thing. If you want to be bullish, you can be above 0.6950, in my opinion. Now, on the other hand, to the downside, 67 cents is support. So that's what I think about the New Zealand Swiss franc. Other than that, quite choppy here. It's obviously consolidating. So I think those are the levels to monitor: 69.50 and 67 cents. For upside or downside breakout. Okay, you say okay, thanks. So I'm guessing that's actually what you asked about. Swissy may be getting some help from Indian, Pakistan situation too. First of all, if we want to speak about the Swiss franc, let's first have a look at the USD Swiss. So as I've said, and nothing has changed. As I was gone, there are two possible interpretations of what's happening here. It's the bearish one, but this is some kind of a large triangle that can break to the downside, in which case you would want to see a move below 98 cents, and that's going to be quite a bearish development. But on the other hand, if you see a breakout from like 102, then that's a very bullish development. Now, in between, we are in the middle of this formation. So in between, actually, I think there is not much you can do. So, 98 cents, 102, the levels to watch. I think that a break of either of those levels should produce follow through, a very decent amount of follow through actually. Now, Euro Swiss, on the other hand, which many times is a good proxy for risk, especially when it has to do with Europe, is still consolidating between the 112 area and the 114.50. So not much to see here. When we were actually testing the 114.50 area, I said that this is a good place to be short because you have a good risk reward opportunity. And if we do break above it, we should see continuation higher towards 117. So far, we just saw a pullback from there. So, those are the levels to watch, like 112, 114.15, 114.50, and 117. I think, from a technical perspective, those areas, those levels have been trading quite reliably. So, if you're looking to trade the Swissy against the euro, I think those are the ones you should be watching. We have another question about the euro yen. In my opinion, the euro yen is likely still within a corrective rebound, right? I'm ignoring in this technical formation this huge spike that we had lower, that on the daily chart looks like it is actually the wick, it's the candles wick. So if you take the rest of the price action, you see that this channels quite nicely, and the rebound ignoring this week has corrective characteristics, which means it's slow, it's very overlapping, it's quite choppy, and actually we're getting close to the confluence of the 78.6 from the beginning of this acceleration lower, which is from here to the spike low that we had, and this ascending channel resistance. All those two levels coincide at roughly 127. So I think below 127, the risk reward ratio favors the downside. Also, one more thing to consider here, we had quite a nice recovery from the spike low, which was at 118.80 to almost 127. I mean, that's a move of 6.5%, which for FX is quite a big move. And despite that, the RSI is far away from being oversold. That's in my mind another indication that this rebound is likely to be corrective. So I think euro yen looks good to the downside if it actually reverses below 127, especially if we break below this ascending channels support. I will be looking for an acceleration lower. Hi, Steve. USD SEC may be good long around these levels. Yeah, something. The situation with USD SEC is quite easy to interpret, and it is the following. There are two possibilities here. One, that this triangle was terminal, in which case you expect another push to the upside, a fresh high, and then a failure. This is always a possibility with triangles. Keep that in mind. We had a nice RSI divergence here on the daily, as you see. Let me actually, this break of the RSI was a nice confirmation that the triangle would also break, but this is the RSI divergence I was talking about. So we had a nice RSI divergence here, and we had a failure. So now there are two possible situations. We have a very huge confluence of supports, previously resistances, of course, roughly here at 910. So if we come down at 910, or anyhow, if we find a good bid above 910, as long as we remain above 910, yes, you can be looking for more upside, in which case my next target would be the 161.8% extension of the triangle's range at 960, roughly. But if we do fail below this 910 level, then I think we should be talking about a nice failure here, in which case I would be looking to short any rebound. So that means that I agree with your comment. Your first intuition that you should be buying dips is a good one, because from a risk reward perspective it makes sense as long as we stay above that area. But if that area fails, in my opinion, you should just get out of the way, because things can get quite nasty. Euro pound, we have a question about euro pound, euro CAD. Okay, let's have a look at both of them. So euro pound. here it is. So euro pound, not unexpectedly, actually, that's what I drew when we were rebounding up here, that we could fail from this previous resistance, previous channel resistance. That's why I like to extend formations, and we did. But now we're approaching previous channels support. So at around 85 cents, which we almost approached, I mean, we made it to 85.30. I would definitely not be short, right? Definitely not be short. So I would be quite careful here, because I think there is no risk reward. Now, if we do rebound and retest this horizontal support area as resistance at 86.30, I think that's a good opportunity if you're looking for more downside. Now, this has already happened, so let me show what I'm talking about. I think if you want to be short again, a rebound to this area will be a good opportunity, okay, to see more downside. But I wouldn't be short close to 85, okay. A rebound will give you a better opportunity and and a decent risk reward to try it out. So I have to say that obviously given the previous move, looking for more downside makes sense. But from a risk reward perspective, look for a rebound towards 86.20. Now, my view on EuroCAD, I haven't had a look at that in some time, but from what I see, I haven't actually missed anything, because EuroCAD is still hugging this broken triangles resistance, which, as you see, has been acting again and again and again as support. So as long as this area is holding, this trend line is holding, expecting a rebound is not out of the question at all. So from a risk reward perspective, the upside looks better than the downside. But if you just zoom out and look at the bigger formation here, I would have to say that there are better opportunities out there. I mean, quite a choppy pair, quite choppy price action. No, not really a clear direction. So I personally, I wouldn't be doing anything. I would be buying it if I was forced to decide to either sell it or buy it. But if I have a free choice of doing whatever with it, what I'm choosing to do is nothing. What is analysis for oil with Trump tweet? Bullish report seems to be in no man's land. Let's have a look at crude. I know that the rest of the team wrote, as I was traveling, a blog post. It was published yesterday about crude. Let me pull it up. Here it is. So, first of all, irrespective of anything else, if we just look at horizontal support resistance levels, I can't really possibly turn bearish crude as long as we remain above 55.20. Okay, so in my opinion, above 55.20, the upside remains the path of least resistance. Now, if we do see a breakdown below 55.20, then I would expect at least one more push to the downside. Now, between 55.20 and 58, which is the next resistance, we're currently in the middle of that. I wouldn't be doing nothing in the short term. If I was already long, I would be holding my long position with a target of 58. If I had no position, which I don't have at the moment, I wouldn't be doing anything between these two zones. If I wanted to be short, I think a break below 55 is going to give you the opportunity to be short, and probably you're going to make some money out of it, because I think that then we should be talking about at least a decent corrective move lower, at least another leg lower. So it's going to be an USD CAD. You mean? Okay, USD CAD. Let me see. USD CAD, in my opinion, still within a triangle. Okay, so obviously, what crude decides to do, as you see, I already showed that crude is between support resistance zone 55-58, right? More or less, you're seeing this type of a consolidation USD CAD, but in the opposite direction. So I have to say that as long as we remain in a triangle, given the previous move, I would still favor one more push lower for USD CAD. Now, obviously, if we break this trend line resistance to the upside, which should happen if crude breaks below 55, then the situation is totally different. But irrespective of what happens here, you need to keep the big picture in mind, which is that USD CAD has been trading in this wide ascending channel since 2017, summer of 2017. So, in general, USD CAD has been appreciating, during a period of, what is now like approaching to be like 2 years, like 1.5. It's actually more than 1.5 years. So even if we do see a breakdown from this triangle, I would be quite careful when it comes to approaching this trend line support. Okay, so I would like to see another move towards 129, 50, 129.70, but I wouldn't be pressuring shorts there unless we go down there with momentum and slice through that support area, in which case we can then be talking about a very big technical event, because I think that if we actually do break below this long-term channel, then we should see quite a more quite a bigger move to the downside. I think we should actually see a move towards 124 at the very least. So I think I already made it to the interview time. Coach, you said you do have an interview, right?
Yes, yeah. One of my favorite guests, Saeed Zayman's with us today at Trader One SC. So you know what I like about his stuff, Steve, and a lot of people don't do it. He kind of looks at quarterly action, which is interesting. It's more than monthly, so I'm looking forward to getting his views on a few things that we're going to talk about today.
I'm a big advocate of a top-down analysis, as you know.
Yeah.
I mean, it's always a good idea having a look at longer time frames. I have a look at the weekly charts 1 to 2 times per week. I have a look at the monthly charts, a couple of times per month. And it's a good thing having the bigger formations in mind, because as I just did now with USD CAD, sometimes you get tunnel vision, you know what I mean? And tunnel vision is not a good thing.
That's why you have to look through both a telescope and a microscope.
Yes, absolutely. Yeah.
You need both scopes anyway. All right, well, great to have you.
If you want to have the, the whole picture, yes, you do.
Great to have you back, man. I missed your reviews. You do the best on the net, putting the jigsaw puzzle together. So glad you're home safe and sound with your new baby, your new sled, and talk to you a little later, Steve.
Yep, we'll be here tomorrow, of course, as well.
Okay.
Bye-bye, everybody.
Buddy. Saeed, how are you, buddy? Like I said in the tweet, you're one of my favorite guests, and I've interviewed well over 1,000, so that's pretty good, man. Saeed Zayman, welcome to Face.
Hi, can you see my screen?
Got it, buddy. So we're looking at copper here.
I've lost yours. I can't see what I'm sharing at the moment.
Okay, you have a copper chart up.
No, but I can't see. I don't know what I've done with it. Can you remove it and then give it back to me again, just so I can fix it?
Sure. Okay. Oh, where are you? You completely disappeared. You must have logged out. Okay, stick around for Saeed. Want to see what he thinks about this ongoing bull move?
He just wrote that he's back, so he just wanted to reload.
So okay, I see him.
Searching. Okay. Yeah.
Got him. Okay, Saeed.
Okay. So I don't think I can see my own screen, but it's all good. Let's begin. So can you all hear me okay? And
yeah, you're clear, and we have the copper up there, putting in a higher low. Now we have that was right here, I believe. Here's your Euro 1 hour. So I could tell you what your and I see you moving your cursor, but that's strange. You can't see what you're looking at. It should be on your desktop or your laptop.
It should be, but I don't know what I've done with it. It doesn't matter. As long as you guys can see me, that's all good.
Okay, so do you want to start with the copper?
Yeah, we can. Something different.
All right. And, you know, anything on your radar, bro, it's always edifying.
You know what it is? Towards the end of the month, I usually focus on short term, but I've got a few macro ideas I can go over, and then we'll just take it from there.
Okay.
So one that stands out to me, like I said, is copper right now. And if you look on it from a yearly perspective, okay, look how bullish we are from the yearly. So we've the low here comes in at 253929. We've taken out last year's low and we moved within it. Now it's only the second month of the year. However, look how much we've covered from last year's yearly candle, nearly half of it.
Yeah.
And if it's the year starting off really good, that's kind of a good thing. We've priced in the wick. We're above. Let's go to the 6 month. Look at the 6 month positive formation. So you can see, you know, it's coming off, you know, previous support here, and it's starting to turn now. So on a 6 month chart, where will be the next objective? It will be this high here. We break it down to the quarterly, and we get even clearer direction that we can see that we've clearly established support here, and it's turning. So I would not be bearish this.
Beautiful candle on the quarterly. It's like outside up, engulfing. You can't find a more bullish candle.
Nope. So when it comes to macro ideas like this, it's really good. Now let's see what this way really gets interesting. So we'll go to the weekly for this, because then we can see more detail. We've just broken out of multi-month consolidation here. So if I take that previous high there, drag that across.
Right.
And I'll get rid of this.
So broke out, and now it's some supply levels up here.
Exactly.
Going back for, what was that, 2018.
So from a quarterly perspective, I mean, from a higher time frame perspective, yearly down, I have more I have confidence now that it should be working towards there. So I can just mark out shorter term targets for that now. And I believe this is going to be the next resistance. We've nearly touched it anyway, but into here, I believe going to come. Bit of a liquidity gap there. And then aiming for that. I mean, as long as the yearly and the 3 months stay bullish, there's no reason to be short this. Ideal scenario would be if we could have got a pullback into here, but looking at previous historic price action, when copper's broken out, it gives you minimal pullback. So for example, whoever's trading like, you know, basic chart pattern like this, they're looking for a pullback, you ain't gonna get it. It's gonna go straight up. Similar to this here, when you broke out of this consolidation, no real pullback, just straight up.
Good point.
So I think this is a very, it's
so
one
the best breakouts are the ones that don't give people a chance unless they went with it on the breakout or the breakdown.
Yeah. Ideal scenario, obviously you want to see pullback, but if it's not going to give it to you, then there's no reason why you can't enter at least a small position.
There you go. Toe in water.
Yeah, and then if it does pull back against you, even better. But if it doesn't and starts forming structure for you to trail the stop losses, then you can just keep adding along the way until you get trailed out, working towards that higher time frame target with the macro view in mind.
All right, so, you brought up a great point. Do you have some type of EA or robot that, how do you construct or what do you use for trailing stop, bro?
Oh, I just do it manually.
Okay, so it's discretionary. Okay, so you know, it moves to a next level and you just tighten it up under the last important level it got through.
Yep, and that's it. Okay. So ideally what I look for example's sake, if we look, we had this sort of this is an example of a smaller time frame one, but the same applies to higher time frames where we established, you know, some sort of range here. So when it breaks out of a range, it shouldn't return to that. It shouldn't really break below that. So for example's sake, if you take a long here or you take a long on that breakout, then you know that where's the invalidation level below this range, because if that breaks, then it's going to go lower. So I use any type of breakout technique to trail it. So for example, when this happens, my stop loss goes from there to there.
Right.
And then in this example now, what range do we have? We've got this range here, and we've got this here. So if we break out of this now, where's my stop loss going to be? Below the range low. So every time a new range, consolidation, range expansion, range expansion, and that's it.
Okay. You know, the simplest things are the most powerful.
Yeah, I agree with that. I mean, I think when people try overcomplicate it, it's just ain't gonna work. But I think making it complicated makes them feel more, professional, this, that, the other. And really, it's just keep it simple. If it works, just don't, why change it?
Yeah, I agree. So someone's asking here, I don't know if you wanted to go there, but you're talking about ranges. Definitely, we've been range bound in Euro for a long time.
Yeah,
So I was curious what you think.
From the last time we spoke, I spoke about this, and I spoke about until we break out of either side, we're still range bound. Look, it came down, took out these lows, all the way back up. So there's another pair I want to go over, cable. I think cable's stopping out. I took a short. Actually, I've just got triggered. But one interesting thing about cable is, we've had such a big move up in this fast and aggressive, and this is the key point we've reached. So let me get this pen tool out. So I've marked out this chart from before, but resistance, support, consolidated around here, but we broke resistance, okay, and we came into that. Now I had a macro bearish view on Euro GBP. So if we look at Euro GBP, this has been driven down mainly due to sterling strength. But the good thing, if you look carefully, this is a key support area. Now, yesterday, what happened, and when I'm timing it, I've timed a possible top for cable, it was based on Euro GBP and not dollar index. Dollar index had a part to it, but Euro GBP, if you look at it, what time did it top out? Bottom 1500 GMT. We go to cable. I posted this chart on the Twitter. Look what happened. We had a stop. Where's it gone? 1500 GMT with a little run here.
Right.
And then broke down. So I think we have a top in short term at least. I'm very bullish macro, but I think we come into there. And what we had with the dollar index was it came into previous support here. So if we look, I remember from the last time I was talking about bearish dollar index, and my target was into this region here, and we've hit that. So at the same time, we had the dollar index coming to it. So then you got to ask yourself, which one's the better pair to trade? Do you trade the Euro USD or do you trade the sterling? Well, looking at Euro GBP, that's coming to key support. Dollar index is at key support. So what's going to drive this up? It's going to be cable weakness. So I think cable is the one.
What great analysis, man. Really good analysis. All right. So yeah, EG is important to me, even if you don't trade it, for giving you your preferred long and short, right? You and I share that in common.
So carrying on with that range concept, okay, what I just said, when I took a short here, if we look, resistance, support, well, now that's broken down, my stop losses would be here. That's another entry there, short term there, and then into there as a new. So yeah, so using ranges for trading your stop and entries. So those are, we shorted this anyway, but yeah.
So, okay, so you're long-term bullish here. You said you're long-term bullish and you're just looking for a correction. What would make you turn long-term bearish in the pound? Okay. I'm curious.
Okay, so let's break. Oh, look at all these drawing tools. Let's break this down, and it's going to depend on the dollar index a lot as well. So if I look at the dollar index, right, I think that see, because dollar index, right, it's been in this range. Okay, it's hard to pick a trend. All I can do for now is trade it from level to level, okay, until it clearly breaks out. So right now where dollar index is at, and I'll get to the cable, it's going to be trapped between. So this is the key macro level, which is the mid range, okay, of the weekly, of this weekly. Okay, that's that level. If that gets a clean breach, then we're going to be trading towards there. But until that's broken, it's still, and it's coming off of it, it's still bearish. So we've had a big move down into key support. It's natural to have a bounce, profit taking, end of month, whatever the case may be. So I'm aiming for, so we've got this pivot here. This was the down, we pushed the market up, and we had support, break of it, okay? We didn't get a retest. So this is gonna be pivotal for me. I know it's a shorter time frame, but pivotal. So for example, say if I wanted to get hardcore long, if I'm not already long here, I'm already short cable, so short dollar through that, I'm gonna be watching this. If this breaks, well, if it was acting as support before, it'll be acting as support again. Then I'll be aiming for this, which then takes me up to the last point where we got the breakdown from the mid-range when we retested it into here. Now this is going to be pivotal for me. Why? Because although it's a H1 chart I'm looking at, if we get a clean break above here, that takes us back above the mid-range for that weekly. At that point, I may have to completely get bullish dollar. Now, if I break down the cable now looking at the cable, I mean, there's nothing really bearish about this just yet. I mean, looking at the quarterly for this, let's look at the yearly for this. Let's see what the yearly is looking. Same as the quarterly. We've just taken our last year's low. Where were we approaching now? So we're going to approach a key resistance, which is going to be last year's open. So we mark that out. So that comes in at 135.035. And then we'll take it down from there, 135.035. Okay, now we'll break down to 6 month. Okay, so just from this chart alone, where's the next liquidity can be resting? Above the previous 6 month high. So that high comes in at 133.627.
Okay, that we didn't quite get there yet.
Nope, but
and we didn't achieve that.
Usually, what market likes to do before it takes a level and it wants to go higher, it'll turn just before that, and then it get everybody short again, then boom, rally. So I personally think, going back to that, the sterling rally will probably resume once Euro GBP comes into here, which is a key level. I'm still bearish Euro GBP. See that SR level there? So what I would like to see is a run of these highs here into there. Now, if it breaks down from there, and at the same time we've got GBP USD into this support level, that's confluence. So I'll wait for my bullish price action, and then that could be the continuation play. So it's not confirmed yet, but if you show me bullishness here and the Euro GBP confirms it and the dollar index coming to the resistance level I marked out, then you've got a green light. We'll carry on going long. So going back to that cable chart, okay, we'll go to the 3 month now. So the 3 month, okay, it's time to turn now. It's coming off key support. So yeah, I believe that's going to be the target there long term. We'll break this down further, and this is where I'm going to go back to my MT4 platform. I'm just so used to it, and I'm going to mark out shorter time frame ranges, and as to why, building that structure behind it. So if we look on the monthly, I think I went through this before. We've come out of a massive accumulation here. We've rallied. All we've done is we've come back down and retested the accumulation here. And since then, what have we been doing? We've been turning. Now, if we look, we had one test of that range high there. So that was the range set. That's the mid-range. Pushed up. We broke below it. Rallied. Made a higher low. So that's the swing low in place. Okay? So on a weekly perspective, if I'm looking for higher highs and higher lows, well, as long as this low holds, this is from a macro point of view, then it's still bullish. So low, high.
Where does that come in? 27.5 about?
Let me check.
Line in the sand that you can,
That low comes in at 127.70s. Yeah, close enough. Yeah.
Okay.
So whatever the pullback is, I'm going to be going towards this level here with these highs, and next. So let's go take this a step further. Yeah, so that's the macro view. So how far can the pullback be? Well, we don't know until the dollar index tells us. But this is not that far from the dollar index. Is not as far from my key resistance. So then I've got a time, unless something drastic happens with the sterling, where it has a massive sell-off, fundamental behind it. I'm assuming this is going to be the next level here. So we just got to time it with each other. Instead of just looking at sterling, say, oh, I'm long sterling here. Well, no, you got to look at the overall bigger picture. And the fact that, we've bottoming out like this, and even on a macro scale, if you look, that's a higher low. So I'm expecting like that. So yeah, long-term bullish cable. And if you look at all the sterling crosses, so if you want to look for further support, all you got to do is look at pound Aussie, pound New Zealand, all looking bullish. Yeah. Euro GBP bearish. So out of all of them, cable is certainly the leader. So yeah, that's that.
Yeah, very nice analysis of correlations, buddy. Love it. Where to now?
Oil is one of my favorites. I think you guys covered oil. So is there any?
No, I want to see what you're thinking.
Okay. I mean,
I'm selfish.
We milked oil last week. That's really good, nice for us last week. But oil, I was bullish this, and now we had a big drop here. Okay, but I think this still goes higher. So 3 month is okay. It's looking bullish so far. If we go to the monthly, okay, look at that turning point here. I've got some levels marked out. So if I go to my oil levels, okay, using my ranges, okay, there it is. So you look at the weekly, okay. If we look, I'm looking at areas of consolidations. We can see that was key support. we deviated it here. Okay, then we got back above it. As soon as we held above it, that told us that was a stop run, whatever you want to call it, or a deviation. Got back above it, held it, made a rally up. Now look what it came down to. So if I'm looking at the range, my range would be this green level here. This is the low, range low. That top green level is the range high, and this gray level is the mid range. Often price will deviate, will trade towards that. You can see how pivotal it's been. Resistance there, support there. It broke it. It tried to hold it. As soon as it failed, it dropped. Resistance there. As soon as it broke above it, it held and a big rally up. So it's acting as a magnet. If we break this down further, we've got this down with that push the market up. If I'm support there again, what I just showed you in the weekly, that was a deviation. What do you do? It's like an inverse head and shoulders, really. Support, and it's been pushing up. Now, if we look, that was the key high time support level. So keeping in mind what the quarterly is saying to us, okay, key support resistance down. We had one attempt above it. So on the daily, you can see 1 week above it failed, another failed, closed and broken, closed above it, and then it dropped back below it. At that point, you're thinking, okay, maybe it's turning. So then where you trap between that low and that high. So if market's going to go all the way back up there again, that shows us that, hang on a minute, this was just a squeeze on the longs or some profit taking, whatever the case may be, but then it's able to push back above it. So now I've created a new validation level, which is this low here. Why? This low has taken out this low and it's made a higher high. Going with a basic chart pattern of higher highs and higher lows, as long as this low holds, we're bullish. Question is, how deep does it come back? Well, we've got support here, we've got support there. We don't know exactly, so we got to break it down, and this is where my ranges help me identify. So if I look at my ranges, shorter time frame, we've come into this low here. Get rid of this for a second, okay? That's the low there. We've taken that out. At the same time, key SR, which is here. Now, normally, what do you see? Support, resistance should become support, yes, but market doesn't be as clean. So if I was to draw like a line chart, well, no, bad example, but you expect resistance, broken, support. But look at it, deviates back below it, it deviates back below it. Now what it's done is, it had one attempt back below it, but what I waited for was a move back above it, and then I went long here. It dropped, it took out the low here, and it's rallied. So now that it's got to stay above this now. Why? Because if it keeps going back below this SR level, that weakens that level. That doesn't look too good. So now I've taken my invalidation from that to that. So now, instead of having stop loss there, that's my invalidation level now. Because if that breaks, most likely we're going to have a deeper pullback. Now let's break it down further. So ideally, what I was looking for was a pullback into this level here. I didn't get that. But yeah, I'm very bullish this. So like I said before, where would be the next magnet for price? It would be this level here. If we break that, historically, what has been the pattern? A clean break of it leads to a massive expansion towards the range high. If that happens again, I'm going to be looking for that. Break of this would mean I'm hardcore bullish, okay? Trading it towards there, but we've got targets in between, which would be something like this here. And then each, SR level at a time, working towards that level there. So I'm very, very bullish oil. As long as
and the only thing changes that your negation level now is under that low at where again? 55 something, or there 56.40. The next level underneath where you'll become neutral is what price? Okay,
so if it breaks this low here, which comes in at
54.90, 55.
Yeah, if that breaks, okay. So yeah. And if it breaks
I'm curious. I'd like an update if you're still focused on it. Last time you were here, you're talking about Kiwi yen, and that when risk off came, you actually preferred the Kiwi yen short over the Aussie yen short. And I'm wondering what your work is saying now about Kiwi yen.
That idea went totally out of the door. When we got that bull run in the indices, I had to change my bias. As much as I was a hardcore bear, and then the market's changing, you got to change it. Okay. But for now, I'm on the sidelines for those pairs. But one setup I do like, I mean, there's a pattern. I did a video on it yesterday. It's on my YouTube channel, but it's the S&P. Okay, so shall I break down the S&P? At least a short-term idea. And the pattern I go over, that can be applied to any time frame, because if price action fractal, from that point of view.
Right. It's just a different title on the chart.
Yeah, I mean, macro view, I am bearish. I think this is not sustainable, but short term, you got to go with what the market's saying. So if I start on the monthly chart, okay, what have we had so far? We've had a move like this. So we've taken out this low cleanly, okay? Imagine it's a 5-minute chart, it doesn't matter. So where's the next liquidity going to be resting? It's going to be resting above this monthly high here and that monthly high there, and then possibly into this level there. So these are objectives to reach for. So once I've got the objective to reach for, that gives me my direction. Then I'll break it down. So if I look at the weekly, so far we've taken out last week's high. So that last week's high comes in at 2803.15. So if I mark that out, okay, so now our trade is going to be hinged around that for these highs here. Daily, okay, what's the daily showing us? The daily, I mean, it's done 2 days of pullback. Yesterday closed bullish, okay. Today it came down, but it's starting to push up now. So if I break this down further, this is where it becomes clearer. I can start to create a range. So it's come down, basic TA, higher highs and higher lows. So it's come down, taken out this level from this support, made a higher high, it's come back down. As long as this, so my validation level when this happened would have been this low here. It's done the pullback. It's coming to where the move was initiated from, which was here. Now we break it down further and break the move down individually now. So we've come down, we took out this low, nice little stop run into a level, broke that high, breaking mark structure and pulled back. Now I posted in the video, as long as this low holds, we should be pushing higher. Where are we targeting? These highs here, and then the higher time frame objectives. Now we can go in deep and look at, okay, what's the intraday range, okay, and can that help us? So if I look at high of the week to low of the week, this is the mid range. The mean is always a level that's always traded towards. Now it's not just because it's the mean. Does it have any other significance behind it? Has it been acting as a key SR level? So if we look, we can see so resistance there. It broke above it, but when it got back, it couldn't hold above it. So that means that this was a deviation above the mean. And this mean, this level, is only obtained once this week's price action unfolded. But the fact that it's proven itself, even historically, gives it more confidence behind this level. So support there when it breaks above it, resistance when it breaks below it, above and below. Yesterday, we had a couple of attempts, and I said in the video, I see when we make a clean break above it, then I can work towards the high of the week, intermediate targets here, and then there. So it's come back down, and so far it's holding the yesterday's low, which is good, and it's starting to break towards the upside. So 2 ways to go. Ideally, I want to see low of the day hold, but I've entered this. I've got a stop loss there for now. But what would increase the odds of the trade? Again, what's the historical pattern? If it breaks above here cleanly and then holds it, how many times is it going to keep breaking above this mean level before it pushes up? So as soon as that happens, that's where I'd love to go long, and then target here and then here. So whatever I just went over, that can be applied to any time frame.
Okay. Another excellent rundown and some great correlations and ideas, Saeed. Thank you so much for stepping up and joining me today and joining us in edifying faith again. Really hope this is one of your best years ever, 2019 in all ways, not just trading, brother. So I really appreciate your work. I respect you, and everyone thanks Saeed for being here. You're welcome, Hamid. And Saeed, good hunting, bro. Let's keep in touch. You can follow Saeed at Trader1SZ, and he's a must follow. Anywhere else people could go to watch you or get a hold of you?
I have a website, tradeaz.com. That's just like where I do my daily reviews and live trading sessions where people watch me trade. But yeah, Twitter.
And, what's
the
website address? One more time, Saeed.
It's just tradeaz.com, really.
Okay. Yep. Trader SC, no one in there. You needed the one to get that handle on Twitter. Okay. All right, my trading warrior brother. Thanks so much, bro. Good hunting. And remember, everyone, that's a wrap for us. See you tomorrow. Remember, don't just count your pips, count your blessings. See everyone tomorrow for TGIF. I have Mickey Fulp here to talk about the metals. And you saw what Saeed said about copper. So Mickey has some real good fundamentals to back up what Saeed has seen. So adios, everyone. Go to member chat to continue the journey of today's action. and we'll wrap it up tomorrow. Adios. And thank you, Face. And thank you, Saeed.